All right, Cornell. Hey, man, thanks for coming on. So you can go ahead, go live now on Instagram, Cornell.
Hey, John Paul.
Hold on one
Hello.
second, but um,
Yeah.
so what was that? Go where?
You're live, man. So, hey, good evening, y'all. This is Bedtime Real Estate. I'm so excited to have this guest here tonight. This is the man, Cornell Newsom. Is not an easy guy to get in to speak about these things, man. He's a busy man. I'm really appreciate him coming in and talking to us about financial literacy, something that most people do not learn in their lifetime. They definitely don't learn in high school or anytime in the grade books. And by the time they learn it, it's too late. So, we had a little bit of technical difficulties, but now we are live on Facebook, Instagram. So tune in, y'all. This is Bedtime Real Estate, and I'll get up to you, Cornell, to kind of introduce yourself and tell you who you are.
Hey, first of all, Pego, thank you so much for inviting me to be your fortunate guest, man. I feel privileged that you chose me out of all people. You know, you're a guy who's doing big things in the industry, and I'm just excited to be on this live with you tonight. A question to ask you, I'm looking to see if I'm on IG as well live. Is there a certain button do I hit, or am I all set?
Oh, for your IG live, you have to make sure you hit go live on the IG,
All
like
right,
this little button at the top.
little button at the top. All right.
But I believe there's a check mark on it, so it's live on IG for you.
Okay, good. That's all that counts. Yes, I'm gonna be on both platforms. So, hey, man, thank you so much again for having me this evening. This really means a lot to me. As you know, I love what I do. Enjoy helping people. Definitely love giving back. Doesn't show that I'm live on IG yet. I'm checking on my phone. Um,
Hmm.
don't see live on the IG yet, but not a big deal. We'll keep it moving. Yeah, just looking for the IG live. Don't see.
Do you see on your tab for
Um,
Instagram?
no, I did not. I see Instagram up there, but not my. Yeah, I do see it.
Yep.
Apologize. It says you are live. Once you are live, you will find out at the top of your newsfeed on Instagram. So must be live. All right.
Yeah.
Anyways, so man, appreciate you. Thank you again for having me. I'm really super excited to be up here today. We could be doing anything, but we're up here today talking about real estate. We're talking about financial literacy, how the two really works together. So I know you invited me to be your guest, but I do want to ask you a couple questions really quick,
Oh yeah,
just to get
sure.
warmed up. So why real estate?
Why real estate?
Yeah.
Well, real estate is I would say the simplest way to build your wealth.
Okay.
Simplest because people understand it. Most people don't understand stocks. Most people don't understand Bitcoin. Most people will never start businesses because it's too much work. Real estate is pretty simple. You can buy a house, rent out a house, and you get paid per month. And anyone can do that.
Right. I've been in the business since 2005, and I've seen people literally like uh, do really well in real estate. I've seen people who got into real estate at a good time, and then they've been able to, use that equity over time to do a lot of things with it. They've been able to pay off debt with it. They've been able to cash out, refinance, uh, buy other properties with it. They've been able to sell and buy two properties because with real estate, it's one of those things that it appreciates in value over time. And then also too, I've seen a lot of people have tax breaks, which was pretty interesting. That before I got into the game, I didn't realize that having real estate that you can write off like you know uh, part of your real estate uh, interest, the property tax, things that you can't do if you're renting, So, yeah, real estate is a really powerful tool of building wealth. The problem is that there are a lot of people that look like us that should be owning, but are currently renting. And we got to change
Yep.
that.
No, there's a lot of people. A lot of people they're caught up in different mindset. They're not ready to take that step forward. They think one thing they think is impossible. They think is unachievable. It's some type of mountain that they can never climb.
Hmm.
So with people of our color, they don't realize how easy it is to get the basic steps in terms of getting towards that progress, get there to own a home and start building that wealth.
Yeah, no, very, very, very true. And it's really simple. I always tell people this, that if you can afford to rent, you can afford to own, no matter what your situation is. Even if you're a broke, busted, and disgusted, and you're struggling, there's still a way to own. Because there's things out there called income producing properties, like really, like multifamilies, duplexes, mixed use. A lot of people don't even realize that you can even buy a mixed use property that has a storefront and you can go FHA with it. You can put down as little as 3.5%. And there's other programs out there that will even give you down payment assistance, where they'll give you money towards your down payment. And then there's other banks out there like M&T, they're actually giving out grants on top of,
Yep.
What the Chopper program is giving. So it's plenty of ways to really own. So I always tell people that one of the best ways to build wealth is to eliminate your biggest expense. Your biggest expense for most people is, besides the car payment, is their housing payment. Would you agree?
Yep. Yeah, I agree.
Now, very, very true. So by eliminating that and then learning how to take that debt, turn to wealth, is one of the best ways to really beat inflation. So how many years have you been doing real estate for?
We have been doing real estate for about 2 years now. It seems like forever. The way this market is going right now and things like that, it just seems like, you have to grind it out, and you have to get people to get into deals. You have to do twice the work. But right. It's been a couple of years I've been doing it, but definitely gone through some significant experience through like the different deals I went through. I've gotten deals where people, that are undocumented. I never knew people undocumented could buy homes. You can.
Yeah.
Financially. Go ahead.
I'm glad you mentioned that. I got a friend of mine. She goes by 81 Tax Prep. She's from Jamaica, and she works with a lot of people that got I-10 numbers. She's a tax person, and she pretty much tells them that, listen, if you got an I-10 number, it's pretty much as good as a Social Security number. And you can use the I-10 number, and you can actually use it to buy a home. So I'm glad you mentioned that, because that's a market. I think a lot of people are starting to wake up that they can actually own. In fact, they see a lot of I-10 clients right now. They're the ones that's buying up a lot of the real estate.
Yeah, because they have cash.
Right, exactly.
They have cash. They're the one who has cash on the hand. Like they could put like 20% down, 30, 40, 50% down. Right. So as a seller, who am I choosing? Am I going to choose someone that has sometimes 5% down with a higher price, or someone has 50% down? A seller going to like, hey, this deal is probably going to go through, and if not, I'm going to keep a good chunk of their money.
Correct. No, very, very true. Which shows they have a lot of skin in the game too. They have a lot more to risk. Especially with sellers today, when they're taking the house off the market, they're taking a risk too. Because that deal doesn't go through. Depends on how the market swings. They could either make or break or how much they're going to profit. So that is a really strong market. I know I work a lot with the K2 team from Concentra Mortgage, and they do a lot, with the I-10 clients. They turn around pretty fast, doing some really great things. But until I started working with them, I didn't realize that there's such a big market out there for folks that have I-10 numbers that do really want to buy.
And politics aside, it's like, some people have been here for like 10, 15 years. Like, at least they should get an opportunity to at least buy a piece of the pie. Because in the end, all that matters is what the banks want is green. Financially, are you stable? Your credit score and your financial life, are you stable? And, they do pay a little bit more for interest rates, know, but because, the bank's taking a risk. Just in case, someone gets deported or something like that, something happens, and they just have a property in their hands. And then they give them an opportunity, though. There are banks out there for them, and most of them people don't know.
Right. Very, very, very true. And the other thing too, you talk about the interest rate. The interest rate is not that bad. It's just a little bit higher than your normal interest rate. Still, it still beats the interest rate of renting. Which is
like right now it's like what, 7.5%. The interest rate is not that bad. It's just like, most people my age that are trying to buy right now, they're so used to seeing that 3.5%, 4% or 4.5% of interest rate. They don't know how it was in the early 2000s, in the early 90s, where it was around this rate right now. It's just that we got so used to it after the whole financial meltdown 2008, where the interest rates went down to kind of increase and boost the market.
Right, absolutely. I see James out there. He said, "Please go over the last part about the new migrants."
Yep. Yeah. So go ahead. You can explain that again. We were pretty much talking about people that are undocumented. Was it? Is it the ID number again? Is
Oh, ITIN number.
the ITIN number. So ITIN number is pretty much the same thing as having a social security number. So they can have credit cards. They can still have credit card and they can build their credit, and so that allows them to be able to purchase homes. Like I went through a deal with someone that was undocumented, but it's been here for years. It's like almost like they're in the process of getting their proper paperwork done, but we found out that they can buy now because they have the ITIN number. As long as you have an ITIN number, then you can still get your paychecks from your job, and you can still run your credit score, and you come with your down payment. There's banks out there that they can use throughout the whole country that are available to provide loans for people to buy homes. So people are afraid, like, hey, I can't buy a home. I don't. If you have an ITIN number, you can buy a home. I've seen it. I was shocked because you assume that you can't. Everything you see on the news and politics, like people like, oh, they shouldn't be doing this, or what. But they have is available to all the banks care about is financially how set you are. Do you have the money? Like things like that. It's like because like they rather take someone that has an ITIN number than someone that has like a credit score of 500 and then is American.
No, very, very, very true. With that being said, there's a lot of people out there right now that's in that market that do want to own. But here's one of the things they have in common with folks that have a social security number is that 3-digit credit score.
Yeah.
So if that 3-digit credit score is low, they're not going to get approved for financing. So your credit score is everything. Your credit score is going to dictate how much and how little you're going to get approved for. That credit score to determine your interest rate. It's going to determine that payment. It's going to determine the type of loan program that's out there. So it all starts with the credit. I tell people all the time that credit is up here with oxygen. You need it for everything. You need it for a home. You need it for a car. You need it for insurance. You need it for background checks. In fact, they said dating sites are now doing credit checks. Did you know that?
Dating sites? No, they should. All these scammers out there, man. These scammers out there, man. Next thing you know, they want you to invest in Bitcoin.
Right. Absolutely. Yeah, but your credit's up there with everything. You need it for everything. So are they eligible for FHA mortgage? The answer is we're not licensed mortgage originators, but I know the answer. The answer is no. Yeah. They have their own. There's a special program for the I-10 borrowers. So it's not backed by Fannie Mae or FHA or Freddie Mac. It's actually a special program that a lot of lenders have portfolio that they offer to the I-10 clients. Some go as little as 96.5%, like FHA, 3.5% down. Yep. But majority of them that close really fast without any hiccups are the ones where they're putting down 15 to 20%. And that's based on my experience. I work with a lot of loan officers that, leverage me so I can help their clients to get across the finish line. And typically that's what I'm seeing. Now, I do see that the credit score requirements that if you have a 680 and above, that's kind of like the number they want to see it at. It makes it a little easier for them to get approved for financing. If you have a 700 and above, it makes it even better, right? So I do realize that the score requirements, even though they're putting down 20%, is still higher as well. But getting that score, if they got that type of money saved, it shouldn't be a problem. The reason why I say that for most people that got bad credit is the ones that don't have any money saved. So the first thing to go when their job goes or their transmission in the car goes is usually their credit because they have no money to pay their bills. So for folks that got 10, 15, 20% down, don't get me wrong, some of them or folks, they still make mistakes as well. They co-sign for people and they don't realize that the person they co-signed for defaulted on that car payment, defaulted on that credit card. They don't know it because they're paying cash for everything, right? And always, and as you know, that cash is queen and credit's king. But I do realize that a lot of folks that do
I
have
never heard that one before.
5% down, that that's a good one, right? That
Yeah.
typically they have better credit scores, and if they don't have it, there's a way to get it. Now, one thing I do come across too is that a lot of folks that don't have a social security number is that they have no credit, like their credit invisible. Everything they pay is cash, and they can change that. There's programs out there where you can actually now add things to your credit report, even with I-10 number, like your auto insurance, your electric bill, your cell phone bill, your rent. Those things now can be reported to your credit profile, and it can build that credit score. And then once that score goes up, there are banks that's out there, like Bank of America. They'll
Yep.
give you a credit card with an I-10 number, and they can start to build a real credit score.
Yeah, Mac, you like that? Cash is queen, credit is king.
Absolutely, absolutely. I always tell people this: would you rather have 100,000, or would you rather have an 800 credit score? People that understand the power of credit will say, "I would have that 800 credit score." Because with that 800 credit score, you
Yeah.
can walk into the bank and you can get yourself collateral, for several 100,000, if not millions, right?
Yep.
With 100,000, that's only going to last you for however long you have it for, unless you invest it. But with 800 credit score, you got super duper buying power.
Yeah, that's true. That's a different way to look at it, man. But that's why we get your perspective, because you have experience and you've been getting people to on the right track and financially. So
Yeah.
So do you have any more questions you got up? You want to quiz me on?
I do want to ask you something really quick.
Yeah,
Like,
sure.
I know a lot of people are saying, like, elections coming up this year, should I hold off? Should I buy now? Should I wait? There's lack of inventory out there. Housing prices are really high. Interest rates came down a little bit, but they also still a bit higher than it was the last few years. Is it a good time to buy?
It's always a good time to buy when you're ready. Like, there's always going to be external factors that's going to affect you to a reason why not to buy. It could be your mom you have to support your mom. It could be that you're not getting that bonus that you're expecting to get later on. Now it's interest rates. Now is the election. How many excuses can you make? If you really want to buy, like, internally, you have to have the right reasons to. Like, is when you're ready personally. If people get to a certain point where they tired of renting, or they're really more ready to invest, or like buy a duplex, something like that. Like, so, like, it's when they're ready internally to actually buy. It doesn't matter external factors. It shouldn't play into your decision unless it's like a apocalypse or something like that, which is
Right.
completely different. If there's like a war, active war, then you might hold off on that, which is understandable. But in terms of politics, you cannot control politics. You can't control interest rates. You can't control the inventory. But there's some things you can't control, though. So, like, if you live in a neighborhood, if you're like renting a house, or someone renting a house in the area you want, start telling people that you want to buy in that neighborhood. Because you know what? That neighbor that lives next to that person, they might know someone's going to sell. You know what you got to do? You have to talk to that person first. You can get there before the realtor gets there.
No doubt.
And you can make a deal with them. So people that talk about inventory, stuff like that, you have to let people know what you want to do. You'll be surprised who you know that can get you there.
Absolutely. Absolutely. So let's turn up the needle a little bit.
Yep.
So when I first got into the mortgage industry, back in 2005, I was excited, man. I thought this was going to be like my career. This is what I was going to do. I thought I found my dream job. I was super duper excited, man. And then 2008, something bad happened. If you remember what happened in 2008, 2009,
Yep.
the economy crashed, right? Real estate market dropped. My dreams was a little bit shattered, but I was determined to make it. So I said to myself that, okay, I either had to live off my savings, and I'll be honest with you, man, at that time, my savings was very limited. It wouldn't have got me that far, right?
Yep.
Or I had to go get another job. And me personally, I feel like 2 or 3 jobs for 2 or 3 different peoples. That's my own personal opinion. Where I had to get creative, and I did. So I started, researching credit repair way before I first got started, 2008 full time, and I got good at it. And but I realized that was time consuming. So I developed a good name for myself in my town. People were calling me the credit guy, credit hero, credit guru. Anything started with credit, people would associate my name with it, especially in a good way.
Yeah.
And then a real estate friend of mine, I think you know this, he used to be a old team leader, also broker of a Keller Williams office in the Danbury Market Center. It says, Cornell, some lady came to my office and did a presentation. I think you need to take a look at the company. Out of his recommendation, I did it, man, and it was the best decision I ever made. When I looked at the company, what stood out to me was the financial literacy piece. See, during my years of teaching people about credit and removing bad things off people's credit report, I realized that credit repair doesn't work. It just doesn't work for everybody. Credit repair is just a band-aid. Here's the thing. If you go out there, or if I go out there, fix someone's credit, and they're struggling financially, 8 times out of 10, they're going to end up back in the same situation.
Yeah.
But when I realized that when I go out there and I educate them about financial literacy, about budgeting, savings goals, how to handle debt collectors, how to handle their creditors if they're like in a pickle, that's what's going to get people across the finish line faster. So me adding that part to my business, man, it changed my life. It changed the way I look at things, changed the way I value money. It also helped me to educate a lot of people to go from renter to homeowner and from homeowner to investor. So for anybody who's watching this live, I want you guys to do me a favor, right? If you guys are struggling, do yourself a favor. Make sure you communicate with your lenders. Communicate with them way ahead of time. Don't wait until you're in default status to try to work out a payment arrangement. Call them ahead of time. Say, hey, my name is Jane or John Doe. I ain't got the dough. Ask, can you push those payments back for at least 2 months? If 2 months has came up and you still can't pay that bill in time, ask, can you pay the interest only over the next 6 months? That gives you about 8 months to 10 months to get back on your feet financially. See, these are the things that was never taught anywhere. People don't realize that. I see a lot of my clients when they come to me, they're in collection status. They're late. They're like, Cornell, what can I do? How can I figure it out? I'm like, all right, man, well, listen, I can help you, but it's going to require a lot of work. So for folks watching this live who's here, if you ever get in a situation, you lose a job, you can't pay a bill on time, contact your lenders ahead of time. Don't wait until you're 30 days due. Don't wait until you're a day late. You got to contact them ahead of time, and most lenders will work with you. This way you protect that credit score. Now, another tip I want to give people is you want to add everything to your credit report. If you pay rent, add it to your credit. If you pay electric, add it to your credit. If you pay gas, water, sewer, cell phone, auto insurance, whatever you pay on a monthly basis, Hulu, Netflix, all of those things, add those things to your credit profile. Why do I say that for? Because it's a way for you to build credit by going into debt. You want to make sure that your credit looks really good. You want to make sure that you're leveraging your credit to get access to money. You want to leverage your credit to get credit cards that gives you reward points. And then what you want to do is ditch the debit cards and start leveraging those credits and then pay it off the next day when the bill posts with the debit card. So let me repeat it again, Pego, if you don't mind.
Yeah. Yep. Go ahead.
If you're using a credit card wisely, right? I want you guys to do this. Use the credit card, the ones that gives you the reward points. Rack those reward points up. And as soon as the bill posts the next day, pay it off with the debit. It's a way for people to save money. I always tell people this: $1 saved in any economy is also $1 earned. Now, there are 3 dates people need to keep in mind when it comes to credit cards. I should probably show the slide, right?
Let me put the slide up. So
let's go to present.
Yeah, go ahead. Let's go to this one right here. So you want to go to the next one?
Yeah, go to the next one if you don't mind. All right, cool. So there we are. So for folks that's watching this is how your score is being calculated. You see, the lowest your score can go to is the 300. Usually most people who have who's new to the credit business, or I should say industry, or people who have made really bad mistakes will have a score that low. And then the highest your score can go to is 850. But there are 5 major components that drive that credit score. If you learn these 5 key components each and every month, your score will go up. You see, the first major component that really drives that credit score is your on-time payment history, right? makes up 35%. One late payment can cost you anywhere from 50 to 110 points. There you go.
Oh,
People
wow.
don't realize that. One late payment. That's why I always tell people that, because that's the majority of your scores being calculated, you want to make sure that you're communicating with your lenders if you can't pay a bill on time. Because again, that one late payment can totally destroy your credit score. Now, 30% of your score is based on utilization, and people get this wrong. They think that if I have a charge card or credit card, better yet, my limit's $1,000, that I shouldn't carry a balance on it no more than 30%. They're right, but it's really based on 30% of average all the credit cards. Individually, each credit card should be below 10%, nothing higher.
I see.
Right? Nothing higher.
Yeah.
Now, there are 3 dates they need to keep in mind when it comes to credit cards. There's the statement date, number one, reporting date, and the due date. And most people, because we're not taught about credit and how it works, they pay their credit cards by the due date, right? And that's cool because it satisfies them not going late. But you want to get in the habit of paying your credit cards at least 72 hours, which is 3 days before the statement date, because your statement date is also known as reporting date. I get a lot of people come to me, Paygo, that say, hey, like my looked at my credit card or looked at my credit report, and I noticed that the balance on my credit card is not accurate. Like I paid that thing off. Why is it still showing? The reason why it's still showing is because when that statement date came, you were carrying a high balance, right? So you want to get in the habit again of knowing those 3 days. So for folks that's watching this live, write these numbers down, write these things down, right? Now, 15% of your score is based on the total age of your credit history. So if you have old credit cards, do yourself a favor, ladies and gentlemen. Do not close that credit card. Here's the reason why. As soon as you close it out, you just gave up 15% of your score. See, over time, your credit ages like me, like fine wine. Just joking. Right? So anyways, keep those credit cards open. Really, really important. I know a lot of people who have started off with secured credit cards, and they'll say, you know what, this secured credit card I got, it has a really low limit on it, and it has maybe a yearly fee on it. So typically they don't want to use it anymore. It does nothing for them, right? So over time, what they'll do is they'll call the credit card company up and they will say, hey, you know what? Close this card out. Just refund me back my money, right? Close it out. As soon as they close it out, they just give up 15% of your score. So if you have a credit card, ladies and gentlemen, yeah, get your money back, upgrade to an unsecured credit card, but whatever you do not close the account. Okay, keep the account open, use it every 4 months, 3 months, so you have some activity on it, so the credit card company does not close you through default, but always keep it open. Now, moving over to the next section, inquiries, new credit applied for. So when you're shopping around for loans, ladies and gentlemen, just give you another nugget. There's nothing wrong with the lenders that's out there, the bigger banks, when it comes to loans, but I'm a big favor of the credit unions. And here's the reason why. Credit unions, they're made up by the members. They're a nonprofit. Most credit unions will use one credit agency for the loan decision maker, right? Where if you go to the banks like Bank of America, Wells Fargo, Chase, even these car dealerships, they're going to pull from all three, right? So what you do is you go to the credit union and ask them, say, hey, which credit agency do you use to give me an approval for this auto loan or for this personal loan? And they might say, we don't know, right? Yeah. So what you do is just freeze your credit, apply for the loan. They'll send you a denial letter in the mail saying that we denied you because we cannot pull a score. And they'll tell you what score it was. Now what you do is unfreeze that one credit agency, go back and apply with that one, leave the other two frozen, and you only got one inquiry on that one credit agency. Right?
You might have to say that one more time.
What's that?
Say it one time. You might have to say that one more time.
Yeah, absolutely. So lenders, banks, they don't care nothing about you. The lower your score is, the more money you make on the interest rate. So they'll pull your credit a lot, especially the car dealership. You're going to the car dealership smiling, come out crying. Right? They're going to pull your credit several different times just because, right? They're shopping around saying, oh, we're going to look around and get you the best deal. But really, they're shopping around for their favor. So what I tell people is to, know your credit score, what it looks like before you go apply for a loan. Number one, you can go to myfico.com. There you can get your real FICO score. There's a couple scoring modules out there. There's Vantage Score. There's FICO Score. Vantage Score is when you get from like places like Credit Karma, right? I call it your FICO score because it's a little misleading, right? But in all honesty, most banks, 90% of them are using your FICO score. So you want to know what your FICO score looks like. So go to myfico.com. Go there. You have to pay for it. You pay for what you get. You can get your car FICO score, which is your auto FICO score. You can get your mortgage FICO score. You can see all your different scores that's there. It's going to probably cost you about 30, $40. But just give you a tip. Just go to Google and say 10% discount by FICO, right? They'll give you the code, slap it in there, and you can use that discount code so you can get a little cheaper. But the credit unions, again, they only use mainly like one credit agency for some of their loan decision makers. So you can go to a lot of credit unions. You can get a car loan. You can get a credit card. You can get a personal loan. They're only going to use one of the credit bureaus, right? Some use Equifax. Some use Experian. Who do they use? I don't know. But I do know this, that if you freeze your credit, you go in there and you apply for the loan, they will send you a denial letter in the mail, sometime through email. And then let's say we denied you because we couldn't pull your Experian profile. Aha, guess what? You just unlocked the code. So now you're on freeze Experian, Equifax, and TransUnion frozen. You go to that credit union and apply for the loan. Now you got one inquiry on one credit agency, not all three. See, too many inquiries in a short period of time, it makes it seem like you're desperate for credit. And that's how people get turned down for financing. Now, the last 10% of your score is based on two types of credit. Can you pull up that slide really quick?
Yeah.
It's based on two types of credit. And that's installment credit versus revolving credit. You see, back in the days, I thought it was just good and bad, which is true, but it's actually a combination of the two. The problem with most people is this, Pago, is that they have too much revolving, not enough installment. Now, what is installment credit? Installment credit are things like like a mortgage loan, land loan, personal loan, student loans. Those things right there are usually have a fixed schedule payment attached to it. We call it amortization in the financial industry, and it's fixed over a period of time. It can be 5 years, 10 years, whatever it is, right? And then revolving credit is anything that you can use today, pay it off tomorrow, and then the line of credit is back available again, like credit cards. So it's really important to have a mixture of the two. Here's the reason why. So a lot of people will say to me, like, hey, Cornell, I used to have credit cards that got me in trouble. I'm never going to use them again. Credit cards are the devil. And I'm here to tell you this, ladies and gentlemen, if you're watching this live, that you need a credit card if you want to get a 740 and above credit score. Without that credit card, you're missing that 30% utilization. It's going to be hard to get above that 700 club. So you definitely need it. So I always tell people you need a combination of the two. But again, use the credit cards again and pay it off with a debit. Now you can stop sharing the screen really quick, or go to the next slide if you don't mind. Let's go to the next slide. So budgeting versus savings, so important. I always tell people this, that if you're looking to like really build like financial wealth, the first thing you need to do is like look at your bank account. Go back, like look at the last 2 or 3 statements and take out a highlighter and like go through your bank account and look at where your money's going out the window at. I guarantee you that a lot of people are spending money in places that they don't even know where they're going to. In fact, before COVID, guys, if you look at my old pictures, right, my face was a lot chunkier, right? Because I was always on the road. I was always eating fast food, right? I knew all of these specials at the Wendy's and places like that, right? And don't realize that, that stuff adds up really fast. Eating out at night. When I went through my budget, when we were in that lockdown, everybody's being quarantined to stay at home, I said, man, you still there, Pago?
Yeah. I might just let you be by yourself. That's all.
Okay. I said, man, the money I was throwing away, I need to take that money and start investing it. So anyways, budgeting is so important because, the average person today, especially in today's economy, they should have at least 6 months in savings, right? You should have at least 6 months of savings. If you don't have that, you're pretty much setting yourself up to get in trouble financially. So again, if your job goes If your car breaks and you have no money in savings, the first thing that goes is your credit. So moving to the next slide really quick. I think I can move it myself. Let's talk about credit versus debit cards. So I want people to get in the habit of doing this. I want you to ditch the debit cards and start leveraging the credit. Here's the reason why. When you're using a debit card, ladies and gentlemen, there's nothing wrong with them. But when you're using a debit card, especially at like convenience stores, gas stations, you could be potentially adding bad company to your bank account. In fact, a friend of mine, she's a single mom, two beautiful daughters. I never forget, a few years ago, she used her debit card, woke up the next morning, she was negative, like almost $900. She was frantic. She was crying. She's like, what am I going to do? I got some bills coming up. My account's negative. The bank is telling me it's going to take them 18 months to do an investigation to refund me back my money, if they'll even give it back to me. She was bugging out, right? When you use your credit card, it has like insurance on it. They have fraud insurance. So if there's a miscellaneous charge up there, you can call your credit card company up and you can say, hey, this charge right here was not authorized by me. I want it to be, investigated. I want my money back. They'll give it to you, Johnny, on the spot. With debit cards, guys, you do nothing for. They don't do that for you. Also, with your credit cards, if you have the right ones, you can use those babies to build those cashback rewards and points. So the last thing I want to talk about is this, guys, is retirement crisis. It is tough. They said nearly 48% of households today headed by someone 55 or older have 0% retirement savings. And of that 48%, 82% are at risk of running out of money. Why is that? Because most people today are joining this club, Pago, which is not really cool. This club is called the 40, 40, 40 Club. And that's where they have a job and they work 40 hours a week for 40 years of their life, never saved, never invested, never did anything to save any money or build wealth, and just to retire with 40% of the income. This is the reason why you're seeing a lot of people at the age of 65, they're still working full time. They're still like out there, like working, like, pushing carriages, doing odd jobs and stuff like that because they can't keep up because of inflation. So the purpose of this call is to turn your debt into wealth. One of the fastest ways you can build wealth, as you know, Pago, is through real estate,
Yep.
insurance, and stocks. Holistically, or historically, I meant to say, those have been the fastest three ways for people to build wealth. The problem is in our community, a lot of our people, we don't have enough. We don't have the type of stuff, and we got to change that. So, you being a newer real estate agent, how's it been for you? Do you see a lot of people today that have like 740 and above credit scores? Or put it this way, do you see a lot of people like out there, like living a lifestyle above their means, right?
Yeah, I see a lot more lifestyle. So I've seen a lot more lifestyle. Sometimes people have the clients they have the higher credit score, but they had low savings. So
Wait a
they
minute,
had the higher. They had the high credit score, but they had the higher credit score, but low savings.
Okay, got you.
They had the higher credit score, but low savings, and they had the lifestyle too. Because people forget about these little things. Like when you're going to buy a house, like you need the 1% for the deposit, at least 1%. You need money for the inspection. You need money for the appraisal. There's going to be closing costs involved when you purchase the property. And people, they don't realize that even with some of the down payment assistance programs, like they can take away a lot of the costs from you, but sometimes there's still some costs that you have to come up out of your pocket. Then people sometimes are scrambling to find it, and it's unfortunate because like like they can get themselves there. It doesn't take that long. It takes just a little bit of discipline.
I see a lot of people who have like good credit scores. They have low savings, but they have more money in their investment accounts. Like people that are wise with money, they don't keep their money in their savings, their check-ins. They put them in things that's always going to be working for them. I tell a lot of people who come to me, especially during tax season, like they'll get that tax refund and say, hey, I want to get my credit fixed, but I got my tax refund. I got about $3,000 in my savings or my check-ins, but I want to wait till I get paid. I said, listen, do you understand what the bank is doing with that $3,000 you got? They're taking that $3,000 or $8,000, whatever it is, and they're taking that money and they're lending it. They're making money off your money, you know, and that's another thing to be taught too. Like always, your money should always be working for yourself. Keep a little bit in checking and savings,
Yeah.
so in case you need to take it out. But I'd rather have again, excellent credit score and have like $50 in my checkings.
So how would you do in terms of like saving for like down payment and stuff like that? Those people are like they're not gonna do like Chafa. Like where are you parking your money while you are awaiting purchase?
I mean, a lot of places, you just don't want to put it into things that you're going to be penalized for cashing out. If it's in your 401k, if your employer's matching it. Again, I'm not a licensed financial person on that end,
Yeah.
so I don't want to give out any financial advice, but they
Yeah.
could put it into a high yield savings. There's
Yeah. Yeah.
places they could put it at where their money could be compounded and making interest on their money and working for them versus sitting in a normal free checkings and savings doing nothing for.
Oh, okay. Okay. I thought you were okay. That makes sense though. Like a high yield savings is definitely a good place to park the money while it grows because nothing like the stock market. Right now is high and it's growing, but like if it ever takes a dip and you got your down payment in there, you don't want it to like drop too low.
Yeah, very true. Right. And that's why they would get what, someone that's licensed in that area. But where I was going
Yeah.
at is that, this is the mindset of a lot of our peoples is that they feel like, hey, you know what? I'd rather have this money sit in my account because it looks pretty and walking around with a low credit score. And I try to tell them that, look, you know, that money that you having bad credit is costing you way much more money than that money sitting in your account, right? So
Yeah.
having bad credit is like having the AC pumping in your house, like on a day like today was really hot and humid, and having the windows open at the same
Oh,
time. You're
yeah.
just throwing away money out the window.
Yeah.
So take some of
Exactly.
that money and invest it into yourself. Get your credit right. Here's one of the problems I do run across. A lot of people want it fixed overnight. They want it fixed in 3 months, 6 months, even sometimes a year. And I try to explain to them that if you went 3 years, 5 years, and don't get me wrong, everyone's situation is different, of having bad credit. It's not going to correct itself overnight. Now, is there techniques and ways you can raise the score? The answer is yes. But to remove everything off your credit in a matter of a few months, it's challenging, right?
Yep.
Because you got to go back and forth with the credit agencies. You got to really look at the credit report, look at discrepancies up there. Can things be deleted from the credit report? The answer is yes. But I always tell people when they work on me, I'm not selling credit repair. I'm selling financial literacy. I'm going to show you a way to build generational wealth. I'm going to show you a way where you can leverage your credit to get access to other money. One of the ladies is working with me. She started with me for about 5 or 6 months. Single mom. Uh, Credit wasn't the greatest. Finances wasn't the greatest as well. But anyway, she was coachable. I was able to help her to boost her credit score where she got herself a high limit credit card. High limit credit card. She was able to take that credit card, liquidate it, right? She was already an entrepreneur.
Yep.
And within 5 or 6 months, she got 5 or 6 streams of income. She got herself
Hmm.
an Amazon store. So she took the credit card, liquidated it, started an Amazon store, used the money for the Amazon store, paid off the credit card. She started a teeth whitening business. She started selling hair. She moved to another place and started a daycare. And then she had an extra room at the place that she's living in. She wasn't using it. She rented it out. Right. So that's why I like to teach. I like to show people on how they can turn debt into wealth, because again, credit repair is just a band-aid. If you go out
Yeah.
there, I fix someone's credit, I remove a late payment, I remove a bankruptcy, remove a charge off, and I don't get to the problem of their situation, they're going to end up back in that same situation just in a short period of time. It's just teaching them the right patterns on how to build wealth. And then once they got the money, that's when they need to sit down with someone who's licensed as a financial planner or an insurance agent to invest that money to build more generational wealth.
Okay. So for you yourself, like what programs do you have for people that are trying to look in terms like to get on the right path?
Yeah, absolutely. So my program, we offer about 22 services. We have credit restoration, credit monitoring, identity monitoring, a debt payoff program, a budget and tool, credit builder. We have credit attorneys, Rocket Lawyer, Will and Trust, and we got some other services as well. But the reason why I mentioned that for is that people are like, wow, that's a lot of service you're offering. It all comes with a very low, small investment, right? They pay
Okay.
$89 per month. They get about 22 services all for my program. No contracts. They use a month, as long as they need it
Yep.
for. The first month, there is an upfront fee. It's really small. But then
Yep.
every month after that, it's only $89 per month and there's no contract. Most of the people, if they're coachable and they're using my
Yep.
program, they'll see a credit increase in their credit score in the first 30 to 45 days, even with bad things in their credit. Usually within 6 months to 8 months, people are good to go, ready for home ownership. But again, it depends on, what they're doing to build a credit.
So, and does that take any time? Like, do you have any one-on-ones with them? Like, how do you do you do group coaching or something like that? What's also involved with
Yeah.
it?
Yeah. So good question. So with my company, because I do service a lot of people, they get email reminders, they get texts, we get them involved. They have their own portal they can go into where they got access to all the products and services. Plus, I'm very communicative. So they know that they can always reach out to me through a text. And the reason why I say a text is because most people today, they don't want to talk. They just want to
Yeah.
know, like, hey, what's happening? What's going on? Can you give me an update? So I always tell my clients that work with me, text me. If you want to call me, call me. But text me this way. If you do call me, I miss your phone call. If I don't see it for whatever reason, at least I got your message, right? Because not too many
Yeah.
people they check their voicemails. But text is always good. But again, everyone that's working with me, they get that same type of customer experience, right? Not only from me, but also from my team. Because again, I got a whole team that works with me. They speak Spanish, they speak English fluently.
Hmm. How about my Haitian people?
We got some folks that speak Creole as well. Absolutely.
Yeah.
That's a whole nother market. I have a lot of people that work with me speaks Creole as well.
Okay, that's good, man. Is this because I know that when we talked about this earlier about going on together and stuff like that. I know you're talking about kind of being recession proof. So I don't know if you want to bring some points about that.
Yeah. So any of you watching this, if you have a job, keep a job, right? But there's nothing wrong with having a side hustle, whatever it is. Whatever it is, get yourself a side hustle because you want to have some type of like income protection outside of just like disability or life insurance, right? You want to
Yeah.
have multiple streams of income. You think about the wealthy people, it's really simple if you study them. One of the things they have in common is they have at least 6 or 7 streams of income, not just one.
Mm,
So when one thing kind of goes down, the other one is kind of still picking up, right? It's called recession proof.
yeah.
Again, there's other ways to build wealth. You can do it through life insurance, you can do it through stocks, you could do it through other investments. But I always tell people find a way, I don't care what it is, to have an additional income stream coming in, at least $500 per month. And the reason why I said $500 per month is that little shortage is what most people need on a monthly basis, just an additional $500 per month. I mean,
Yeah.
that can cover someone's utility bills. It can cover a car note back in the days, not today.
Yeah. Yeah. That's
Today's
six
probably
thousand
covering
dollars
your
a year.
auto insurance, but back in the days, it can cover your car payment. But you can do a lot with it. But that's what I'm talking about being recession proof. But again, financial literacy is key because once people understand how financial literacy works, they can then pass this knowledge from one generation to the next generation, and they can break generational curses, right? They can show their family as they're growing up how to leverage credit the right way. Don't get a credit card and max it out. Don't get a credit card just to get it. Don't get a credit card to go into debt. Never charge something you can't afford to pay back. That's why I say use the credit, pay it off with the debit. It's called being
Yeah.
responsible, right? Create yourself a budget into it. You know your monthly expenses on a monthly basis. Where's your money going at on a monthly basis? Do you track your expenses? Are you one of those persons like to go out and pop bottles?
Yeah.
Are you one of those persons like to go out and just turn up for the weekend? Look how much it's cost you on a monthly basis. If you do like doing those things, keep doing it, right? But get in the habit of leveraging these two things. OPM, which is other people's money, or OPC, which is other people's credit. So if you plan on having that type of lifestyle, why not use credit cards that's going to give you some points and rewards. And now you can enjoy these points and rewards to offset debt in other places, right? So now you want to travel with your family, go away for the vacation. Guess what? You're leveraging OPC, right? You
Yep.
want to take care of the things. You want to get collateral. You can use OPM, other people's money. And that's one of the ways too, you can actually, set yourself up to become recession proof as well. And these are things, again, that are right there in front of our eyes. And a lot of people aren't paying attention to it.
That's great, man. You provide a lot of facts tonight. School a lot of people, a lot of information, man. And this in Cornell, he's available, man. He's on Facebook. He has his own Facebook page. You can follow. What's the name of your Facebook page, Cornell?
Yeah. Carnell Newsome. It's my full name, Carnell Newsome. So you can follow me on Instagram, Facebook, TikTok, LinkedIn. I'm on all four of those platforms. So you can find me on those. I'm pretty active. DM me, shoot me a DM. I'm always looking to educate people. I'm always looking for an opportunity to speak, in front of folks. I don't care if it's a church. It could be, for the teenage kids who are just looking to learn about entrepreneurship. It could be with real estate events, anything. I'm always looking for a way to educate and service the community, because growing up, I'll be honest with you, man, I never knew about none of this stuff. I learned the hard way through the school of hard knocks. No one ever taught me anything about credit. Money was taught a little bit, but again, money doesn't come with instructions.
Yeah. Oh, that's a good nugget right there, man. I never heard that. That's pretty good right there.
Yeah, money doesn't come with instructions. A lot of people don't know how to manage it. They get the money and then they don't know where it goes at. They get paid on Friday and broke by Saturday, right? Yeah, or they get paid on Friday and owe someone on Friday.
Yeah, I know.
But we could change all of that. But again, it starts with the educational component. So man, this is great, Pago. I can go on and on and on. This is what I do every single day. So my folks that's up here, how can they follow you, Pago? What's the best way for them to reach out to you?
Oh, you follow me on Real Estate with Pago on Facebook. Instagram is Pago Jean Paul. You can find me pretty easily. You can follow me. I'm always posting on my Facebook page. On Instagram, I'm posting too. I'm also on YouTube too with Real Estate with Pago. So you can look me up. And if you're looking to buy or sell, reach out, because there's a lot of opportunities there that you may not even know about, especially with down payment assistance programs. Most people, they don't know what's going on. So it's like, you have to know somebody in the industry. Don't go alone. Don't try to do anything by yourself. And it gets them the right protection in terms of get the right agent to protect your needs. And because a lot of times people go straight to the listing agent, but remember that buyer agent is there to help you. Is on your side. Listing agent, they sign with that person first. They sign with you second as a buyer.
Now, very, very, very true. And so what's another reason why they should work with you?
Well, I'm honest. I tell you the truth. Like, when you work with me, I'm going to tell you the truth. I'm not going to lie to you. And I'm going to allow you make your own decisions. Like, because everybody's an adult and stuff like that. So I'm going to tell you when you're missing opportunities. I'm going to tell you when you need to jump for it and jump into an opportunity to get in the home. Or I'm going to tell you when it's a good time to do something. But I'm going to tell you the truth, though. I'm not going to lie to you. You're going to make a decision. You're going to make the right decision for yourself. Like, for me, people, real estate agents get a bad rap in terms of like their honesty and what they provide in terms of value and stuff like that. But to be honest, I'm a person that would tell you the truth, let you know what's going on, give you the facts, and let you make your own decision. So that's a big reason why you should work with me, because you don't know, you also need someone in your corner, someone you can trust, and someone that can be able to help you make the right decision for you and your family, because that decision is probably at least 2 or 3 years. When you buy a house, you're going to be there for a little while. If you get in there out of there with less than 6 months, it's going to cost you some money and you're going to be upset.
Very true. Very, very, very true. Pago, what I like about you the first time I met with you, like, you always been a guy of integrity, and you stand behind the clients. You do what's best for the clients. You make sure the clients really understand why they need a professional, in the corner, versus just saying, hey, jump in my car. Let's go see this
Yeah.
problem, right? Like, are you pre-approved? How much for,
Yeah.
right? Do you understand the ABCs of, of owning home ownership? When I did a first time homebuyer seminar with you, it went really great. I just love the way that you broke everything down, explaining to your clients, that made me want to work with you, you know, serious. It really did, because you really sat there and because some people you assume that they already know,
Yeah.
but you still like broke it down to them like they were brand new, which was pretty cool. You explained to them the importance of dealing with a buyer's agent, dealing with the listed agent, dealing, how long they work with you for,
Yeah.
your team that you have in place to help you to get across the finish line faster. Helps you to communicate while you're going through contract, which is pretty cool. Like, your mortgage guy, your attorneys, the company you with,
Yeah.
things like that, which is really, really speaks volume, because Keller Williams is a company that's been around for many, many years.
Yeah.
Great track record, doing some great things, big on training and technology, stands a lot, so yeah, Pego, I can go on and on, man. I love doing this. I love educating people. We got to do a round two.
Yeah, I'm down for it, man. I think round two, and we're definitely have more people here. But people are going to look at this video later and do like, damn, I should watch this live. I have questions.
Yeah,
So, but
definitely.
I really appreciate your time, Cornell, man. That Cornell is a busy man. He's been up probably since like 6 o'clock in the morning. He's been running through the whole day, man. So
Yeah,
I'm gonna let him be, let him relax, let him rest, man. I really appreciate you coming on and
I appreciate you for having me, man.
spitting knowledge to us.
All right, man. I'll see you at the top.
See ya. Have a good night.
Okay.